Hi everyone, welcome on Money. I am Mark, and today I am very thrilled to host Michael Aucoin, CEO of EATS.CN, a company specialized into the plant-based food sector and meat alternative industry. Hi Michael, how are you today?
I'm excellent. So very nice to be with you today, Mel.
Awesome. So before we go any further, could you tell us the story behind EATS.CN, like how it started, what the company does especially?
Absolutely, yeah. Um, you know, Eat Beyond, the genesis of Eat Beyond comes from, quite frankly, just the tsunami of growing consumer demand around plant-based foods and alternative protein products. Uh, and that's led to this incredible ecosystem of innovation that's going on. There's a tremendous amount of startup activity, and investors, retail investors, quite frankly, who are very keenly interested in this space, simply didn't have the opportunity to participate in it. So as an investment issuer, what Eat Beyond does is we place investments in early stage companies, and we operate in a world somewhere between kind of a venture capital and incubator. So we work very closely with our portfolio companies to help them accelerate. But importantly for retail investors, it gives them to participate in these companies in a pre-IPO stage. And really, kind of help participate and define the future of plant-based food. So we're very excited about the space. We're getting a lot of traction, both from an investor engagement perspective, and certainly from the innovation community. So yeah, it's a lot of fun.
So wait, just basically you're looking for all the new opportunities. Basically, you're doing like all the work for all the shareholders, right?
Yeah, that's exactly it. We
Yeah.
as we look at portfolio companies, we put them obviously through a pretty rigorous filter. For us, we want to make sure that we have the ability to help them accelerate and quite frankly be better. If you look at a lot of the innovators in the space, a lot of the entrepreneurs, they tend to come from certain defined backgrounds. A lot of them are product developers. Some are marketers. But relatively few have had a corporate career or background that's been well-rounded, and they've done a lot of general management where they've touched a lot of either manufacturing, marketing, commercial sales, these kinds of things. And so that's where we look at, is there a way for us to help them? So again, the first filter is always, is it a great idea? Is it a good product? Number two is, how can we help them accelerate? And we have what's different with our models, we have a raft of advisors, and as we engage with a portfolio company, our advisors come with us and they participate in the equity. They have equity participation in Eat Beyond, but they also have equity participation in the target companies they're working with. That gets them really excited about creating value. And then and we make sure we've got entrepreneurs that are ready to work in terms of with that kind of team and rapidly accelerate. And the acceleration thing is quite important in this space, simply because the consumer demand is moving so quickly, and evolving so quickly that and with all due respect, when we look at portfolio companies, and some will come with a 5-year plan, the chances are the consumer demand will move quicker and shift quicker than a 5-year plan. So if there's an opportunity right now, oat is incredibly hot right now. We're seeing now the next thing coming. Certainly plant-based seafood is exciting. Plant-based, meat and ground beef is done. It's well established at this point. So the opportunity to act on these trends is immediate. And if you're doing something that's only going to land in the marketplace in a year, you're probably going to miss the opportunity. So, we need people who are ready to with help, be activated and accelerate quickly.
And this is crazy. And what about you, Michael? Because as you said, like it's an emerging sector, is growing so fast. Have you always been into this sector, or you were in another background before?
Yeah, so I've been a CPG, consumer packaged goods food guy, my entire career. Worked for kind of a number of tier 1 organizations: Campbell Soup Company, Smuckers, Hershey. Most recently, I was the president of one of Canada's largest dairy companies, Agripure Cooperative. And as such, I was kind of on the other side of the coin of plant-based. So I was, seeing plant-based was kind of a threat, but it meant we were certainly looking at all these trends. And the story on plant-based is quite frankly very compelling. The need for it, whether it's from a consumer health benefit that plant-based is healthier, in terms of what it means from an environmental perspective, or just the ability to feed the world as we continue
Mhm.
to grow. And the traditional animal protein industry simply won't, it won't be scalable to that level with the growing demand for protein. So plant-based, we saw as a coming tsunami, and for me, the opportunity to participate in that was compelling. So I joined Eat Beyond 4 months ago. A bit of a shift for the organization at that time. So my predecessor was a capital markets guy, finance guy. Did a great job in terms of establishing the company. But with my arrival, really harkens that in-depth engagement with our portfolio companies, with the advisors of really getting into it. So, our advisors are not, I'll talk to you once a quarter for an hour. It's, I'm going to spend 10 hours a week with you in terms of really working the plan and building it out and helping and guiding and making introductions and really guiding it out that way. So with my experience on the CPG side and the deployment of my connections there, I have the ability to activate, a tremendous roster of advisors that we can tailor for each of our portfolio companies.
Yeah, I see. And okay, so this week I was checking It's Beyond Finance because I really do care about it. Sometimes you have some stocks that are triggered by hype, but this one I think was truly different. Like I started to see it thanks to Nabachi, the one that went who did hit IPO. We'll see about it. We go about it later. And when I was checking the CDR, the financial statement, sorry, the first thing I was astonished was the low number of fully diluted share. And when I saw 33 million, which is nothing fully diluted, my first thought was like, okay, this is so small. But as you say, you are investing to companies and there are so many great companies coming on the market. Could we see, I would say, a healthy dilution, because at this number of shares, nothing. Could we see a healthy dilution to raise cash and to see a faster expansion?
Yeah, so we actually have a prospectus filed to raise more cash. It won't be dilutive to the share price, but we'll put more shares out there. So we certainly, if you look at our initial investments and what we aspire to, so our initial investments aren't, quite frankly, as large as we'd like. Even the Nabati investment, we were the lead investor and then syndicated a second wave of investment with friendly investors that we know. But ideally, Eat Beyond would have taken a larger position. So we were, modestly capitalized at the outset. With this next round of financing, it'll allow us to play bigger roles in bigger deals, and in particular, the second round of financing that might happen pre-IPO with a number of the portfolio companies. So that's certainly contemplated, but in the context of us, deploying that capital and playing a bigger role along those lines in those deals, it won't be dilutive. I think it's just going to give us a better ability to go execute and attract, quite frankly, better portfolio companies. We'll have more kind of financial muscle to deploy in the space.
Yeah, but still, like at this point, like it's what you are saying. The financials are healthy. It's going to be a healthy dilution because there are so many companies that want to expand fast, but they're already so fully diluted that it would be a loss for the shareholders. But on the way you are saying, for sure, it's a great growth opportunity.
Well, and I think what's quite exciting about us and our holdings are public. If you go into the CEDAR filings, you can see what our holdings are, and but there's a lot of value buried in there because our public companies, it's very easy to ascribe value, but the private companies we've invested in, we typically mark those investments at the book value we invested, yet we know there's subsequent rounds of financing that are increasing the value all the time. And part of the model, and we'll do this in a very responsible way, but our focus is really going to be that acceleration phase of our initial investment to monetization. So generally speaking, that's an IPO. We come from a capital market background. That's what we do well. It would inevitably we'll have some strategic acquisition within our portfolio that some multinational will look at and say, I just simply have to have that, and it will be the right price to do that. But with us, what we will do is as we grow with those companies and go public, we'll responsibly wind down some of those positions. We'll never exit them completely. We believe in these companies and we want to continue to advise and help them to grow, and I think that's an important part of our role. But we'll recycle that capital, and that'll also allow us to grow our capitalization and get into bigger deals.
Okay. And seeing the zero feelings, they were a number that I really loved, and I was like, wow, it was about the existence price of the warrants, and I saw $2.5. and like you can convert this one in less than 2 years. In 2 years, it's tomorrow. At this pace is going so fast. So I was like, what strategy are you gonna use to reach this stock price? And in the meantime, because maybe it would be great for our listeners if you could give us a compound annual growth rate, it would be great.
Yeah, so with us, a CAGR is kind of an interesting question because the nature of our investments, there'll be step changes in our valuation based on how we're realizing the returns and when we take our portfolio companies to monetization and realize that benefit. So it's hard to peg a number. I'll say, if you look at, and you can do the math on the Nabati valuation as it sits today relative to our initial investment, our return in that 9 months is about 3x, which is fabulous.
Yeah, for sure.
Right. Yeah. So
It's not bad,
and
yeah.
that's the value of the acceleration phase, right? Is what we do there. How that will flow into the beyond is when do you monetize and how do you flow it through to actually recognize those returns. I think what's important for us right now is Nabati was really the test case of that new, very aggressive model of advisory services and really partnering with a company, and we're really seeing the benefit of it. So as we're going through this current round of financing, we're queuing up for further portfolio companies that we'll be able to announce hopefully shortly, and partner in the same way and drive that same kind of return. And the Nabati story is an unqualified success. It's happened in a very rapid time. Our first engagement was September last year. Discussions, our investment went in November, and 11 months later they went public into rave reviews. It's hit the ground running. We're very happy about it. So that's what we want to repeat with all our portfolio companies, as with our new investments as we go in.
Mm-hmm. So because you're saying some companies are starting to get traded, and like everybody was talking about Nabati Foods because, like, let's say for me, it's the one when I saw the news after I checked on it beyond. This is how I saw the company and what you guys were doing, and this is I was very interested in it. And when I was checking the Cedar Feelings, there are also a lot of private companies that you are have a stake in it. And let's say I want to see what's your stake in the company. How can I find it? Is it just on Cedar Feelings, or let's say anybody like can ask you, hey, what's your percentage stake in the company, for example?
Yeah, in terms of always getting the exact percentage on some of the private companies, it's because of successive rounds of financing. It's not always as easy to get that number. In terms of what our holding is and where the valuation is on that's reasonably easy. So that's in our financial filings. We detail the list of our investments, and anyone who asks, we're happy to say what that is. In some cases, we've got insight into what our percentage holding of those companies are. As we move forward with portfolio companies, and we'll be much more engaged and have a bigger inbound shares, it'll be a little easier on that.
So your main focus is just on private companies or already traded companies?
It's about investing in private companies and taking them to either go public or be sold to a strategic. So it's that acceleration phase is the main focus. So for us, again, that filter is we need somebody with a great product idea, but a product already developed. We don't typically invest in an idea on a page. Maybe a little bit of distribution, because that's where my advisors that really understand the marketplace can come in, help them grow their distribution, grow their sales, build a better marketing program, help build the brand, and really accelerate. That's the stage we like, and we're best at investing in.
So right now you are still enjoying to 7 private companies, right? 33 Labs, 5-8, all these one. And okay, would it be possible if one of them would be publicly traded in the near future?
Within the current roster, look, so the way we look at it with our portfolio companies, and in particular the upcoming investments, is we look, and Nabati's a great example of this, is we look at what is the right time to go public in terms of creating that story for investing. What's the right price of capital, private versus public, and importantly, as you go public, and I think you're seeing it with Nabati, what's the right time to do it when you've got material news that's very exciting for investors and is going to drive growth, and a continued news cycle that's valid, isn't just window dressing, so to speak. And I think so with Nabati, we were very mindful about when was the right time to take it public? How is that on its financing arc, but also how's that on its corporate development arc? So we know we'll be able to generate a lot of investor enthusiasm with Eat Beyond. What we, one of the things we want to do as far as building the Eat Beyond brand within the plant-based space is we want to build a great brand with certainly innovators and entrepreneurs, saying that's the company we want to partner with because they'll help us. We want to build that same brand with investors, saying we know we can invest in Eat Beyond portfolio companies as they go public, because Eat Beyond is going to help drive the valuation, even once they go public, and help that. So very, very focused on that. So as we look at each of the companies, we lay out a plan of 6, 12, 18, 24, 36 months. And we look at it and say, okay, well, what are the right inflection points where it makes sense to go to market? And then we look at how the market's performing and see is the timing right? Because the markets do move. And we want to make sure it's the right time to do it for the company, so it has continued stock performance.
Yeah, it's a very smart strategy, because sometimes, actually it's quite often, sometimes you see some company that just go public and within the next 6 months, they lose like 60% of the valuation because the fundamentals are not there, just because they're not ready. So for sure, it's very smart. And yeah. And so I was wondering, because so basically you are finding the new opportunities, the new entrepreneur company that have not potential for value, a real value. So would you say this is what makes you different from your competitors?
Yeah, with us, it's so we're classified as an investment issuer. We're an innovator in that space within plant-based. There's a couple more that have popped up recently. I think what's certainly different with us is that embrace of the CPG background. Not everyone has that. And then, the leveraging of that advisory role, which is very different. I mean, we really roll up our sleeves and get in with the company to help them. And this is all the things we negotiate going into a deal with the company. So there's no surprises when we get there in terms of what it looks like, but we bring those resources to help. And it's really different. I think, there's a lot of venture capital money out there that can cut a check. And they're looking and betting on the quality of the idea, the quality of the entrepreneur, but they don't have that same kind of active participation once the check is cut. That's what really makes us different from typical venture capital. And then I think if you look at the investment issuer, we've built a roster of people that are just is unparalleled in the space. So and we'll continue to add to that. I think what's been really exciting, I arrived 12 weeks ago, is the amount of enthusiasm I've had from titans, quite frankly, in the industry around looking at what we're doing and hearing the story and saying, hey, how can I participate in that? How can I get involved? And they see the opportunity twofold. One, they come to it with a genuine passion for the business, a passion for the opportunities, and then obviously there's a wealth creation opportunity for these people that they can drive equal amounts of passion.
Yeah, and at the pace this sector is growing, and okay, we can say that it's going faster than the sector. Where would you see the company, let's short term 3 years and long term 7 years? Because I know it's hard to think because it's evolving so fast, but maybe you could give us an idea.
Yeah, look, there's a bunch of strategic options. I think the big thing right now is, and as I've arrived and really kind of been able to spend my kind of my first 120 days here, it really uncovered the value creation opportunity in that acceleration phase. And so right now we're focusing on that, and we're going to use that to build our capital base, because we think that's the biggest acceleration. Once we get to scale, at that point there becomes an opportunity to look and say, is there an opportunity? This is not predefined, and we're talking probably 3-5 years down the road. Do we migrate that or spin off some of this into a holding company that we can bring portfolio companies together and help them operate better by simply having more efficient structures and plugging into more efficient structures and building a more formal structure under it? As we operate right now, and with the opportunities, I think the acceleration phase is the proximate opportunity that we're going to drive a ton of value on. But that those are the kind of considerations we're looking at. How do we build the infrastructure to support these companies ongoing? And that's an opportunity once we've grown and really broadened the breadth of our portfolio.
Okay. Well, thank you for just this part about the company, because it was great to explore more about It's Beyond, because there was so much to learn and to discover about this company. And before we finish this interview, I would like to know more about the man leading the orchestra, you know.
Yeah, sure.
And I'm gonna ask you, at what stage of your life you knew you wanted to accomplish big projects, because this is a big project.
Look, it's an incredibly exciting project, and I find myself lucky to have had the opportunity to engage with this, and for me, it's the right moment, the right time. I've been lucky to be successful in my career. In terms of driven to accomplish, I mean, that was just bred into us in terms of that quite frankly competitive nature. Is how we grew up. My brother and I. My brother was a longtime professional athlete, and you don't get to those levels without being incredibly competitive. And I've kind of done the same on the corporate side, but done it in a way that maybe is certainly collaborative with people and building teams. So I look at it as just an incredibly exciting opportunity to leverage the skills and background that I've had. So as part of my background not only was the corporate side that I've done, but I also ran a large sales agency or a broker. And what that meant was I was helping, at the time I had 80 companies that we helped manage their business in Canada at the time. But so you can view those as kind of portfolio companies that we had to tailor solutions to help them grow in the Canadian marketplace. And that was the business. I had 2,000 employees helping us do that. And it just fits perfectly with this space in terms of how we look at each of our portfolio companies and tailor a solution to help them grow. So it's the confluence of experience, track record in the industry, and this incredible opportunity in terms of not only the demand for plant-based as it sits today, but we just see a tsunami of growing demand over the next 3, 5, 10 years of plant-based and eventually even migrating into cell-based. We've got investments there as well that I think is going to be needed just to feed the world, and we think we're going to help define that future and be part of that solution.
Yeah. Okay, I'm sorry, but it was very inspiring, to know more about your background. And well, our interview is done, and I wanted to thank you to know more first about and to explain more about EATS.CN. And thank you, and also thank you for knowing more about you, because I do believe it was very inspiring, and that's it. And
well, I really appreciate you. You flatter me. I'm always happy to engage. As quite frankly, I'm a lifelong learner, and as I have these discussions, I learn more as well. So I think what you do is important and it's very interesting, and I'm happy to keep the conversation going whenever you need, because this is incredibly interesting, and we're very passionate about what we do.
This is great. Well, thank you for everything. I wish you to find the next new opportunities in the plant-based food.
Excellent. Thank you very much.
Thank you. Have a great day.
Okay. Have a great day.